You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit Verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Hello again. I'm Don McDonald, and that's Tom Cock, and this is Talking Real Money.
Hauntingly good today on Halloween.
It's Halloween if you're listening live. It's November 2nd or later if you're not. We're just glad you're listening. We don't care what day it is. Because our goal, our purpose in life is to help you manage your money better. Avoid making some of the mistakes that so darn many people make. I mean, there's so many mistakes made around managing money, and they're not without consequence. Financial mistakes can really mess your life up. That's why we think this topic is so important. What?
Yeah, one of the ones I see on a regular basis is people have a tendency to look at their portfolios and say, this part of my portfolio is making money, the other part's not. Why isn't the other part making me money? And we try to talk to them about having two parts to the portfolio. One is the stock part. That is designed to make you money over time.
Well, it's
the
designed.
Fixed income.
We hope.
Yeah. Well, okay. Yeah. Well, it's designed to try to make you money. Yeah.
Right,
but the other part, the fixed income part, the bond part, should be the part that keeps your money. And yet many of you look at it like, well, wait a minute. I want to have everything making money all the time. By the way, me too. But I don't know how to do that.
Me too.
And it's even tougher in this very low interest rate environment. So low interest rates are terrific for people borrowing money. Mortgages, cars, whatever it is. Although I don't think credit cards have come down much lately. But, boy, they got to be making some real money if they're charging 20%.
Oh, my gosh. There are still some that are charging 25+%.
That's good.
Great margin.
Yes, great business. Yeah. I mean, I don't think it's good for you. But here's where the mistakes start. Because right now people are saying, we had a caller last week. CDs are maturing. Got to move the money to something. What do I do? Mm-hmm. And the mistakes, you talk about expensive mistakes, because what people are doing is they're saying, well, I'll find something that is yielding something, making me money, right?
Right. I need to make money on my money, darn it.
Guess what's
it's not fair that I don't get to.
Right. Yeah. People think it's unfair, or they think there's got to be a trick to all this. And the trick oftentimes people see is high yields. Mm-hmm. Right? Owning things that are paying out higher yields. Well, one of them would be the Vanguard High Yield Bond Fund, VWEHX. V as in Victor, W as in what? Whiskey. I thought that you'd know that one.
I don't know any of these.
E as in Echo, H as in Hotel, X as in X-ray. But here's the thing.
I actually try to make it a point not to.
The yield is 4.9%.
Oh, it is. I'm looking at it right now. Wow.
That sounds really great. The problem is 95% of the bonds it holds are BB or lower. And that could be troublesome. And there's a recent article last week talking about some of these big retailers going out of business, like Men's Warehouse. Mm-hmm. The bonds that they floated and then refloated and wrapped up. How they do all this, I don't get. But you know what those are paying now on the dollar?
I mean, what you're paying for them on the dollar?
What the bondholders are getting back out of their $100.
Oh, yeah. What they could sell it for. Yeah.
Out of their dollar. Yeah. 2 cents.
2 cents on the dollar.
Neiman Marcus.
Yes.
Apparently didn't sell enough of those purses for $5,000 each, or whatever they were selling them for. 3 cents.
Well, what did they do with all their needless markup?
Thank you. The thing is, they're pulling on the purses, but not the purse strings. I mean, the thing is, you don't want to go out and try to find places to get yield right now, because you're going to pay a price. The Vanguard fund I just mentioned, the high yield bond fund, is operated very, very well. They're doing exactly what you want that fund to do. The problem is what that fund exactly does when the stock market gets wacky is it goes down too. 2008 lost about a quarter of its value. because those companies cannot make their payments. So do not run out and buy those things. Do not run out and try to find yield. Keep your money on the bond side to hold the money, the other side, the stocks, to make the money.
And what's really interesting is if you look, and by the way, the Vanguard High Yield Corporate Bond Fund is one of the very best. It really is one of the higher quality ones because it has much lower expenses than many of the others. But this is very interesting. When you look at the long-term performance, it looks more like an underperforming version of the stock market.
Really?
Than it does like a bond fund. For example, this year, the total return on the Vanguard High Yield Corporate, remember, it's yielding 5, but its total return so far this year has been 1.
Yeah, you wonder why.
You lost money because of the lower quality. 2018, you lost total return was negative 3%. So even after the high yield, you lost money.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
For your real life and real future, Tom and Don are talking real money.
Welcome back to our little Halloweeny show. I'm Don, that's Tom, and this is your dough that we talk about on the show every week, whether it's Halloween or not. By the way, are we going to do the day after Christmas live? I was just looking at the calendar. We do the day after. We're on the day after Christmas.
Yeah, because where are we going to be?
Yeah, it's true. Where are we going to be? You're going to be there. I'm going to be here or in Virginia, wherever.
So it doesn't matter.
So it doesn't matter. All right, we'll be here then. Look at us.
I keep threatening to do something to go, like, let's go somewhere. My wife goes, no.
Not in this thing. No.
I know. She keeps saying no.
I know.
She's right.
My wife wants to go out and do things too, and I understand. It's like, it's hard.
I know.
But
fatigue.
This disease is pretty bad.
Yeah, I really soon not get it, nor have anyone I know get it.
Yeah.
So,
I mean, literally, my brother got it, and he still has symptoms. It's 3 or 4 months later. It affected his blood clotting, and it's just bad. Anyway.
Oh, Larry's still there, by the way.
Give us a call. 855-935-TALK, 855-935-8255. We just found out that Larry was on hold, and we didn't know, so we're gonna
he gets an extra
talk to
piece
him.
of candy or something.
Hi, Larry. Welcome to Talking Real Money. You giving out candy now? Hi, Larry.
Yeah, absolutely.
Hi, thanks for taking my call. The reason I'm calling is to congratulate you guys for the way you presented something. I was in my car driving home, and you were talking about the fact that the Democrats, Republicans in this election will not have any major effect based on history on the stock market.
That's correct.
Not one way or the other.
You're welcome.
I'm glad you put that out there because I don't know that stuff. I don't follow what you guys do. But anyway, I was impressed with that, and I thought, by golly, I'm going to call and tell them thank you.
You're the best. Thank you. We appreciate that.
Oh, that's very kind. Yeah, we really do.
That's better than candy.
Do vote. That doesn't mean not voting. You should still vote.
There are other important reasons to vote, but you don't vote based on the stock market.
Yeah.
I mean, there may be financial impacts on your life. See, we're separating those
true
from the stock market. Yes, if you make over $400,000 and Biden is elected, you will absolutely pay more in taxes. You will.
Well, not even there,
no,
because you
Congress
got to get through the House and the Senate, et cetera, et cetera.
So, you probably will. We got to hedge everything.
Yeah.
Oh, by the way, speaking of, you were talking about low rates and people doing stupid things and hedging and I mean, a lot of companies, like for example, I just read that Apple has now they're sitting on $200 billion in cash. Do you know that is enough?
With a B?
That is enough cash. It's almost enough. They're just a few bucks short of enough cash at the current market capitalization. They can buy all of the Walt Disney Company. Every bit.
By the way,
of the Walt Disney
I'm going to put this out there right now. They can buy you and I. We'll say whatever they want.
Tim,
no
you
question.
want us $200 billion?
Sold.
You got us.
That was easy.
And
that's easy.
We'll even shine your shoes. We'll serve you dinner.
Oh, we'll do more than that.
Oh, yeah. No,
be assured
we
of that.
will be the best servants you ever had for $200 billion.
That is a lot of cash. I mean, but they have it sitting around in what? Cash or bonds
I don't
or
know.
something. I'll bet they don't have it invested in Bitcoin.
That was what I was getting to. The Jason Zweig
Yeah.
piece, where I don't remember the name of the company, but they're sitting on a bunch of cash, and they decided instead of keeping MicroStrategy, that was it. Instead of putting it in the bank or in bonds or in whatever, they decided to put a huge chunk of
basically all their cash.
their cash in Bitcoin.
Now, and here's the thing. I love the rationale.
Yeah. What?
Yeah, the rationale is, well, okay, cash isn't paying anything.
Right. It's paying zero.
Right. And here's where you really start to veer off track a bit. You're going out of the rails. The Federal Reserve, the government is putting so much cash into the economy that we're watering down the value of the currency. Mm-hmm. And eventually, that cash that you have today won't buy as much in the future. Well, that's always true to some extent anyway. Thing called inflation. And here's his rationale. I won't even get his name out, but
Well, you can look it up, MicroStrategy.
Yeah, he's been there for a long time. By the way, he had a little trouble with the Securities and Exchange Commission a long time ago.
There's a surprise.
But his take is, well, you put it in Bitcoin and you'll never lose. It won't lose its value.
No, actually he said the opposite. He said, well, if I put it in cash, I know I'm not going to get anything. Whoa. Bitcoin's $13,500 a Bitcoin now, and it was
20, right?
But it was also
Basically.
just a year ago about 3,000.
Yeah, right.
Not 13,000, 3,000. So the dollar, can the U.S. dollar, is it likely that the U.S. dollar will drop from $1 in value to, 10 cents overnight? No, really highly unlikely. Could Bitcoin drop from 13,000 to 1,300 overnight? Yeah.
Yeah.
It actually could, dude. I mean, this is really stupid.
Yeah, and it makes up now a big part of his market capitalization.
If he wants to make that money make more money because he thinks the interest rates are too low, go buy some higher yielding bonds. Or wait, buy some stock in some other company if you don't want to buy
How
yours.
about Apple? They have a lot of cash.
Yeah, you could buy their cash.
Jason Zweig said, if you want to make a bet on Bitcoin, just go buy Bitcoin. There's no reason to buy this stock so you're making a bet on Bitcoin. That is not a very good idea. Because basically the company now is a big bet on Bitcoin.
But it's also run by a guy who apparently is about as illogical as human beings come. To say that cash is riskier than Bitcoin.
Yeah, and remember, Jason has been writing about all this for a very long time. He has no dog in this hunt. He just putting the facts out there, and he even says at the end, you're just making a bet. When you buy a stock, you usually buy a stake in a business. In this case, you're buying a stake in an asset class that has no track record of any sort of balance to it.
I
I'll
even
put it
hate
that way.
calling it an asset class. To me, it's still an invention.
Air.
It's an invention. Yeah. I mean, let me look at the latest on Bitcoin. Oh, it's 14,000. Oh my gosh.
Oh, so it's rocketed up.
Ridiculous. It's up 3% yesterday.
Yeah. Okay. Well,
that's not a currency. Currencies don't go up 3% in a day. 855
and currencies you can use to pay your bills, taxes, etc.
855-935-TALK. That's our number. Hey, Dave, you're up. Welcome to Talking Real Money.
Hi, Don. Two questions. One, I have money invested in Vanguard. Probably had it there 20 years or more, mostly because you recommended it. I've always been happy up until the last year, and it seems like I've had real problems with customer service. I don't have problems with the fund. I have S&P 500 and total stock market. But like I called customer service on Friday, just wanted to transfer some money from my account to my grandkids. I was on the phone for like an hour and 25 minutes, and they were unable to do it. They've done it in the past in 20 minutes. And I've had other problems with them. Do you have any suggestions on Wow. I should do there?
This is so very, very interesting. This is so interesting. You're not the first to say this recently, in like the past week. Let's talk more about it after this really short break. 855-935-TALK is our phone number, 855-935-8255.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's vestory.com, or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK. Call us with your financial issues. Now, let me start by saying it used to be that Vanguard literally listened to every show I ever did. They had a transcript of every word I ever said. So I would have to assume they probably still do the same thing. Vanguard.
Big Brother's watching you?
Yeah, Big Brother's listening. Vanguard, literally in a week, this has never happened before. In a week and a half, Dave's is our third complaint.
No, we had a guy last year that said the same thing, but okay.
Do we have one last year? Well, we've had three now in the past week and a half. People saying Vanguard's customer service has declined dramatically. And I mean, really long and involved.
Well, frankly, to call and to want to move your money that it takes an hour and a half, that's ridiculous in this business. But so is Dave still there?
Dave, you still here?
Dave?
Yes.
Okay.
Well, even on
that is
things like the fellow said he had to talk to his supervisor. He was unable to reach his supervisor.
Wow.
I asked if I could talk to one. He said, well, that would take an appointment. He'd have to reach his supervisor to make the appointment, and maybe it'd be the next day, but probably not.
Here's what
this is moving money from one account to another that are all at Vanguard.
It was moving money from my account to my grandkids' account, and I'm not on there. My name isn't on there. But I've done this in the past, and it takes a little bit of time. But as I say, maybe 20 minutes. And
I got to tell you, if this was the good old days, I would literally pick up the phone and probably get somebody who would go, this is appalling, and but the good old days are gone. We don't really know much of anybody there anymore. But I can tell you what
I know somebody at Vanguard.
Well, we do, but he's like our rep. We probably, but here's what I do. This is what I do whenever a company either impresses the heck out of me or disappoints me in a big way, somebody in whom I had a lot of faith. I always, without fail, send emails to CEOs. Always. Because
how do you get the CEO of Vanguard's address?
I could find it online. Guarantee it. I'll find it.
Really?
It always works. I mean, I'm telling you 100% of the time with a decent company, it works. Because here's what happens. Even if the CEO doesn't see the note, there is a CEO complaint desk where usually a VP level person sees that note and is told to take care of it. I wrote a positive note once to the CEO of Delta Airlines, and I got a response personally on my from his iPhone the next day. So good CEOs will respond. The CEO of Vanguard is a guy by the name of Tim Buckley, Buckley. And
Dave, did you have another question as well?
Well, I just want to follow
you had
on
two
this
questions.
for a minute, because I did look online to see if there is a way to contact anybody, and I didn't see a way.
I'll find it.
Okay, that'd be great.
Yeah, I mean, so by the way, this came up with another brokerage firm, financial firm this week, where we talked to somebody that they had a lot of troubles. They wanted to sell out of their account, and then they got bought back in automatically, and then the firm denied that they wanted to sell it. It went on and on and on and on. I mean, frankly, I think if you're working with anybody and you can't get things taken care of in one day, in one phone call. Oftentimes people say, I'll take care of it tomorrow. I even think that's too long in the financial services industry because we're talking about your money. And so they should be responsive. They should have high customer service. We have no idea. Don was pointing out that we had two other emails this week from people about customer service at Vanguard issues. Remember, Vanguard has grown tremendously in the last decade. 75% of the money they now manage is in index funds. That's been a turn from it was 25% like 15 years ago. So all those index funds have added a lot of assets. Vanguard has also expanded their services, right? They now have a kind of money management service where for rather inexpensively, they will put you in Vanguard funds and manage the money. I don't know how much advice you really get beyond that. So, I mean, this is things to think about when you hire somebody. They're just a big firm, and you may get treated that way. I hate saying it, but that's true. Don?
And his email address is likely, this is the formatted Vanguard, but it may not necessarily be the case, Tim B. It's the first name and the last initial at Vanguard.com. Try sending an email to that, see what happens.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Reality radio for a really great future. We're talking real money.
I gotta tell you, I'm so glad I don't live close to you.
How's that?
Because I would have to come over to your house for Halloween.
And get free pizza. Ooh, that'd be horrible,
but the problem is seeing you dressed as the Tiger King.
I think it's going to be pretty cool.
I don't think I could take it.
You don't think I'm in a blonde mullet works for you? No? Okay.
I can't. Well,
I'm thinking if I like it may be my everyday deal.
If the problem is that he's always dressed with his shirt unbuttoned.
No, that's not going to happen.
Just don't do that.
30 years ago, maybe.
And are you doing the Fu Manchu
I got the
mustache?
Oh yeah.
Oh,
yeah.
Dude, this is going to be epic.
Yeah.
All right.
Yeah.
Everybody head over to Woodinville.
No, don't head that. No, because this is socially distanced. We're very safe. We've only invited the neighbors. They're going to come over, pick up their pizza, and go home. It's very.
All right. Do you have a real tiger to carry around?
No, we got a bear.
You do have a bear.
I have a real bear.
I forgot. You got a real animal. So
he'll
Tom
smell the pepperoni and be right over.
Have your wife draw a bear on your chest. Just to outline.
Oh, she'd like that.
855-935-TALK. Give us a call. We've got a couple of thousand lines open for you on this Halloween.
All tricks, no treats today, so drop by.
All Hallows Eve, unless you're listening to the podcast on Tuesday, and then it's Election Day.
Speaking of Day of the Dead, it'll be Election Day when you actually get to hear this, so there you go. Perfect.
Two octogenarian presidential candidates, practically.
Why don't they give some of those kids in their 60s a shot? What do you say? I don't know.
Hey, there's this kid named Buttigieg. He's just like a baby.
Yeah, barely alive.
He's a baby. 855-935-TALK, 855-935-8255, or you can also send us questions at TalkingRealMoney.com using the contact form.
Fancy.
Like this one. Question regarding selling and buying mutual funds.
Yes.
Hi, Don and Tom. We have mutual funds with the American Funds, Class A Growth Fund, New Economy, Capital Income Builder, Capital World Growth and Income, and Investment Company of America. Apparently an Edward Jones client.
Good
That's
guess.
Sure what it sounds like. Do we need to wait 31 days from selling these funds to purchase Vanguard Total Stock Index or Vanguard Total World, VTWAX, and Vanguard Small Cap Value? Thanks for all you do.
No. There's no wash rule there. You go ahead and sell.
Those are all. It can only the only time. I'll give you an example. If you had an S&P 500 fund that actually owned the S&P 500 and nothing else in the proportions of the S&P 500, in other words, an index fund, and you wanted to move from that loaded index fund into Vanguard's Index 500 fund or 500 index, you'd have to wait 31 days or it would be a wash sale.
Yeah.
Because those are substantially identical.
kudos to you for cleaning up your portfolio. I mean, the funds you recommended are somewhat diversified, but you hold a lot of the similar stocks in all of those, almost guarantee it.
Growth Fund of America is large company growth stocks. Capital Income Builder, pretty much the same. Capital World Growth and Income, pretty much the same. Investment Company of America, absolutely the same.
Yep. So people have a tendency to think, well, I own 5 funds, I have to be diversified.
Mm-mm.
And you're really not. So if you moved it even to the VT wax, you're going to own far more securities. You're going to own them at a far
I like the
lower
idea.
price.
It depends on your age. If you're really looking for diversification, a lot of VT wax and a little bit of the small cap value, because that gives you that.
And
small
you know we believe in diversification. That has been the one protection you have. By the way, it came up in a way that I'd never expected yesterday.
Oh,
so I was talking to a client
before
late
you go to that
afternoon.
story, I want to give you the P.
Hold that story and then wait till after I'm off the air.
No, there's a P.S. on this note.
Oh,
I
please.
didn't read you the P.S.
Oh, yeah.
P.S. Love the Saturday and Sunday podcast editions by Tom.
Oh, that's very kind.
There you go.
I hope you'll like this weekend's. They're a little different. So somebody yesterday said, well, you've really taken diversification to a whole new level.
We have?
Because even your family life is diversified. Because I said, I was going to babysit my grandsons. And she said, well, don't you have like a 12-year-old daughter too? I said, I got kids and grandkids of all ages, sizes. It's a whole thing, man. You got it all covered.
Yeah.
You're good.
Yeah.
She said, it was actually her. She said, oh, so you believe in diversification at home and when it comes to investing? I said,
that's
funny.
Right. That is funny.
I thought it was pretty good.
It's, you're not perfectly diversified though. There's almost all toe-headed kids in that family.
No, that's true.
There is definitely a dominant blonde gene in there somewhere.
Which I think I read once is going to be all gone in like 50 years or something.
Apparently not in your gene pool.
Well, unless the bear comes back this afternoon.
Brown bear.
We'll see.
Adopt the brown bear.
Yeah, that'll break things up a little bit.
That'll kind of kill off parts of the family, too. 855-935-TALK is our number. We have time for your calls, and we also have another question or two. 855-935-8255.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Before you get tricked by a broker, get a little treat from Talking Real Money. Call 855. I know it's 855.
Yeah,
855-935-8255.
The tricks are on them. The treats are here.
Yeah, that's right. And so give us a call or send us a question at talkingrealmoney.com. Either way. And by the by, because we do podcasts, we do take calls anytime. So if, like, you're listening to this as a podcast, or you get home and you go, I wanted to call. Well, you can still call. Just leave your entire question in as much detail as you can possibly at that number, 855-935-TALK, and then I'll answer it during one of next week's or the week after's podcast.
No salesman will call.
No,
so we don't do that.
We
just answer them.
We just answer them.
Call me Monday morning, Don, at 9 o'clock.
855-935-TALK. If you want to talk to one of our advisors, that's a different number.
Sure.
Totally different number. They don't answer this number. You can also send questions anytime at talkingrealmoney.com using the contact form. You can type them or you can speak them. You can even speak them online. Magical. Now, we have another question for you, Tom.
Gosh.
I'm sorry. We're getting toward the end of the hour, but
I know.
You're going to actually have to think about this one, all right? So put on your thinking cap. Oh, by the by, speaking of the Tiger King costume.
Yes.
Do you have a jumpsuit?
No, I don't. So, yeah, I won't. I'm gonna wear a fancy shirt, though.
Well, but, that's really not him now. You need a prison jumpsuit.
Oh, I see something in orange.
You
would
need
be
a little
delightful.
orange stripe, something like that.
Well, I gave the last one out to Lori Laughlin yesterday, so
she
we're out,
needed
clean
that
out, so
for her Fuller House.
fashion plate that she is. Yeah,
Terrible
Fuller
jokes.
House. Okay. Thank you for stealing it, though. I
Terrible
love it.
jokes. All right, here's the question. It's a question about bond funds.
Uh-huh.
And, of course, to butter you up in advance, the questioner says, hello, love the show. Yeah, uh-huh. Mm-hmm. Then you hit Tom with this. All right. I have a question about bond funds as to how they relate to long-term interest rates when reviewing the performance of VUSTX, Vanguard's long-term Treasury Fund. Long-term. Going back to the late 80s.
Oh, okay. I don't know what the duration on that is.
It's had a fairly steady return relative to, say, equities. Okay. It's had a steady return despite long-term yields having long stretches of going nowhere, bouncing around, but then returning to where they started. As the price should be inverse of yields, why is it that the long-term Treasury Fund has had a steady return, never a 3-year period where it lost money, despite several long periods of yields being flat? Can we infer that even if yields stay roughly where they are for the next 10 to 20 years, the long-term Treasury funds can still have a steady, positive return? Is it just because of, quote, rolling down the yield curve that they're able to obtain this consistent return, or is it something else?
Did you write this just to mess with me, or what's the heck?
No. I just thought this would be fun for you. And
the answer is yes. Next question.
The answer is yes.
Thank you.
All right,
easy.
let me kind of explain what's going on.
First of all, I don't know how long. What is the duration
check.
on that fund? I was trying to find it. I get it on my phone, but I couldn't.
Well, that's because your phone is too small and your fingers are too big.
Yeah, and I know. I wish
I don't know how my wife types on her phone all day long.
So fast. I know.
I do. I have to have a computer.
Well, I don't actually, having watched The Social Dilemma, I don't know why she does, but that's a whole other
All right, here we go. I got the duration for you. Whoa.
How long?
Wow. 18
I would think it'd be
years.
out there long. Wow, okay. Yeah.
Wow.
So I'm trying to boil the question down.
Well,
the question
I know. What I
really
understand is
why is the
stay...
return so steady?
Yeah. Why is the return stable
why isn't that more variable?
in a period of falling interest rates? But let me tell you, it's not as stable as it would seem. It's got a relatively high level of volatility. When you measure the volatility is measured by a thing called the standard deviation of a product.
How much something moves from the middle,
and
up and
a
down.
standard deviation of 0 is like a certificate of deposit or a bank savings account.
Yep.
Doesn't move. Got a standard deviation of 0. The Standard & Poor's 500, which moves a lot, has a standard deviation of, I think it's about 16.
I was going to say 17, but okay.
Somewhere in that range. I'd have to look it up. The Vanguard Long-Term Treasury Fund is not going to be as volatile as a long-term corporate fund would be because it's less risky. But get this, its standard deviation
how much
is 12.5%.
Wow, that's higher than I would have thought.
While you don't think it's been volatile, it in fact has been quite volatile because when you compare that with, let's use a better comparison. Let's use the Vanguard Balanced Index, which is 60% stocks and 40% bonds. You would think because it's heavily invested in bonds that it would have a much, much higher standard deviation when in fact the Vanguard Long-Term Treasury Fund is more volatile than a balanced fund, which
in some
means
ways
it's more risky.
In some ways that makes sense, though, because you own stocks and bonds in one, and when one's doing one thing, zig and zag a little bit, so you could get that effect. But back to the question, I think the question really is why has the return been relatively stable over time?
New bonds.
In a falling interest rate environment. Yeah, basically it is. Mm-hmm. They're buying a lot of bonds are maturing. They're buying new ones on a regular basis. Now, remember, today they're buying bonds with pretty low interest rates.
Well, and you can see that in the declining yield. See, you got to compare everything. You can't just compare volatility. You can't just compare the price. You actually have to look at what that yield has been over the years, too. And the yield on that long-term government fund in the 80s was in the 10% range.
Sure. Yeah.
Today, it's less than 2 for that long yield. Less
Even that
than
long. Wow,
2.
yeah.
Now, that tells me that they've replaced a whole bunch of the portfolio with lower yielding bonds. So,
by the way, compare that to the high yield corporate that we talked about earlier that's yielding 4.9.
And the curiosity is that the Vanguard Long-Term Treasury Fund has had comparable periods of decline, not identical, but in 2013, that fund was down a net
How much?
Of 13%.
Really?
A net. That includes
13.
the income, and the income at that point was probably 5, 4.
Yeah, quite a bit more.
So you had an almost 20% gross decline.
Yeah, that's very interesting. I mean, this is part of the reason, by the way, that, again, when we think you should own bonds as the ballast in your portfolio, they're really short and intermediate term bonds. They really don't go past 10, 11 years. Mm-hmm. You start getting out further, you face increased volatility due to the changing interest rates.
Well, and let's just compare this with the Vanguard intermediate term corporate bond, which I just mistyped. Intermediate term. Oh my gosh! How come I can't spell anymore? All right.
DIAT.
I'll get it here. I just keep typing it wrong. Vanguard Intermediate Term Treasury. Here we go. I got it finally. They just do interim dash. The Vanguard Intermediate Term Treasury, remember the long term had a duration of 18.4 years.
Yep.
The intermediate has a duration of 5 years.
Wow.
5 years. And the volatility of the intermediate is 3.5%.
Yeah, so you're really taking a lot of the volatility off of the and what's the yield on that today? It's gotta be tiny.
Hold on, let me pull it back up again. Actually, it's only a tiny bit less than the long term.
Yeah, so
1.4%.
This is another reason not to hold those longer bonds. You take more risk, and you really have not been paid for it over time.
We don't believe in holding long-term bonds. The risk is too high.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
While some parts of the economy are doing really well, there are others that aren't, and we're seeing some dramatic layoffs in some industries, either involuntary or voluntary layoffs. And if you are about to or think you're gonna take a voluntary layoff, or you're about to suffer an involuntary, get your plan together. Get your retirement plan together. Find out what you're going to do with that 401k. Get some ideas and get them for free with no obligation, with no sales pitch even, from one of our fiduciary advisors at Vestory. We help everybody. So give us a call at 800-386-3004 or set up a free appointment at vestory.com. That's VESTORY.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.